There's the closing bell on Wall Street, and now it's market domination overtime. Jared Blickery is going to be joining us, and Josh Schaefer's here too to get you up to speed on the action from today's session. I'm going to start with the major averages here and where we ended the day. Positive for all three, but much more positive for the NASDAQ, which of course got a lift from Meta and Microsoft as we await Apple and Amazon here. And as you see, the NASDAQ finishing higher by 1.5%, the S&P 500 up by 0.6%, and the Dow higher by about 83 points. That's about 0.2%. All of this, even though we got some economic data in the form of the ISM manufacturing report as well as jobless claims, it may be cause a little cause for concern with manufacturing contracting yet again. Jared's got to look under the hood here. Hey, Jared.
Thank you, Julie. Let's take a look at the Wi-Fi Interactive. I'm going to show you the Dow first. This is the laggard of the day, up only about 82 points or 0.2%. You can see a little bit of a sell-off into the close. S&P 500 holding on to gains of over 0.5%. And as you said, Julie, the NASDAQ flying high, up 1.5%. And by the way, the Russell 2000 also cracked 1% to the upside. Not seeing much of a sell-off there. I do want to see the VIX here finally cracked under 24. This is going to be the lowest that we've seen the VIX in about 4 weeks. And let's take a look at the 10-year T-note yield as well. That's up 5 basis points today. If I show you the 1-year chart, we'll get to some heat maps in a second. You can see kind of in the middle of a range that we've seen over the last month. Now let's go and see what the sector action brings us. And here, that was the NASDAQ 100. Looking good there. We'll come back to it. Tech XLK up in the upper left. That is up 1.5%, fueled by Microsoft. XLI's industrials, that's also outperforming the S&P 500, up about 0.75%. Healthcare, Eli Lilly weighing on healthcare, that was down 2.75%. Also in the red, consumer staples, materials, and financials. Now let's get back to the NASDAQ 100, where we see Microsoft, best day in a while, up 7.63%. And I'll just show you the year-to-date real quickly. You can see, there we go, over the hump. So Microsoft back in positive territory for the year. And I'll show you Meta too. Meta, another great day. Still underwater for the year, but some positive traction there. Let's skip over to the Dow real quick. Got a few seconds left. Aside from the mega caps to the left, we're seeing more red, a little bit more red than green. We'll call it a mixed board to close the day. And then I'm going to lead us off on the leaders. And we can see the MAGs, that MAG 7 ETF, that was up the most, up 3%. Also seeing some positive traction from Bitcoin. So let me just flip there real quick, up 2.5%. And look at that, Bitcoin's also in the positive for the year. So 96,500, we're going to call that a day and send it back to you, Julie.
Thank you so much. Let's get to earnings now. We have Amazon coming out in just the past few moments. And really what stands out to me, let's just hop right to it, is the second quarter operating income forecast of $13 billion to $17.5 billion. Now, two things there. It's short of estimates is number one. The average analyst estimate for operating income was $17.8 billion for that second quarter. And the other thing that stands out to me is how wide that range is. $13 billion to $17.5 billion, an unusually wide range, which reflects the unusual and uncertain operating environment under which Amazon is operating right now, and so many other companies as well. We talked about the effect that tariffs are having both directly on the company and indirectly on the company, on the sellers that operate on its platform. It gives a lot of services to them, so all of that having an effect. So that's the forecast, getting that out of the way. Now let's talk about the numbers for the last quarter. And those numbers looking pretty good on balance here. First quarter earnings per share, $1.59. That's versus the $1.36 that analysts have been looking for. AWS net sales, $29.27 billion. That is just shy of what analysts had been anticipating. And so that also could be a focus for investors here. But Josh Schaefer here with me on set. And overall, the numbers last quarter looking good, but that outlook is a bit of a punch.
Yeah, absolutely, Julie. And you mentioned it. It's really the range there, right? Thinking about the fact of swinging from operating income of anywhere between $13 billion to $17.5 billion. We're playing with very large numbers here. That is a significant amount of money that we were talking about that is up in the air. So basically, you're sort of feeding into what I think a lot of the investor fear has been around Amazon, which is an extended exposure to China, extended exposure to tariffs, and what does that actually mean for the company? And perhaps they're saying a little bit right right now, they're not quite sure yet, right? And I
Yeah.
think that feeds into the moment a little bit. Other thing I wanted to point out here when you were highlighting second quarter net sales, that's also a rather wide range-ish relatively, 159 billion to 164 billion. The estimate was for 161. But again, just a decent sized range there when we're starting to play with high numbers. I think it's going to be interesting when we get to the call to really sort of hear a little bit more commentary on exactly what they're factoring in terms of the high end and the low end of that operating income. Like, is the low end full China tariffs? Is that sort of the fear here? How do you sort of assess that part of it? But again, shares are down about 5% right now, and I think that's really probably just the key driver.
Yeah, I'm looking at the release now, which is just coming through and doesn't have a lot of commentary around that guidance. Presumably we'll get that on the call here, but the company does have a long list of what is going into the financial guidance. They do say it is subject to substantial uncertainty. It says the following forward-looking statements reflect Amazon's expectations as of May 1st, 2025, and are subject to substantial uncertainty. Our results, they say, are inherently unpredictable, could be materially affected by many factors. Foreign exchange rate fluctuations, changes in global economic and geopolitical conditions, tariff and trade policies, and customer demand and spending, including the impact of recessionary fears, inflation, interest rates, regional labor market constraints, world events, the rate of growth of the internet, et cetera. But you get the idea here that there is this weight, this cloud hanging over them that includes just a lot of X factors right now.
And it's interesting, especially with a company like Amazon, Julie, right? Because they do have so many different parts of this business. They're talking about recessionary fears and consumer spending. Obviously, Amazon sells stuff online to a lot of us, right?
Yeah.
So that's part of the story always with Amazon. But then it's also the B2B part of Amazon's business, AWS. And how does cloud spending play out if we do get some level of an economic slowdown? How does ad spending play out if we get some level of an economic? Every little piece of their business is, yes, tied to the tariff story perhaps, but also just tied to the economic story that's built off the tariff story. And there's so many different offshoots that I'm sort of curious what the focus is going to be from investors as we move out of the call, right? What part of the business matters the most right now and are we most concerned about or could be a driver?
Yeah, it's a great question. Well, let's put that question to our next guest. For more reaction to Amazon earnings, we're bringing in Rohit Kulkarni, Managing Director and Senior Research Analyst at Roth MKM. You heard us just talking about Amazon here and the diversity of its business, which at times is a real strength and superpower for Amazon. But at a time like this, Rohit, does it mean that multiple different parts of its business are vulnerable at the same time?
Yeah, absolutely. I think the surface area of risk and the surface area of exposure to China tariffs and geopolitical and macroeconomic uncertainty that Amazon has is unlike any other. So they solve a complicated problem, they get rewarded for solving that. But when there is a complicated problem that presents itself, I think the complexity increases. I think in the release and the stock reaction, I would just flag two things. One is after Microsoft, after Meta, after Google, I think the expectations were slightly elevated. The beat was expected, but raise was also expected. I think that's what was the expectation going into the print. So I think in isolation, these are really solid numbers, but Q2 guide, as you exactly said, Julie, the margin guidance is below expectations, and we'll need to find out what's going on over there.
Rohit, it's Josh here. I'm curious with that second quarter operating income guidance, the range just sticks out to me, right? We're talking about 13 billion to 17 billion. I mean, what do you make of the range and what do you think is going on there?
I think there are a couple of things that are one-time in nature. So recently, they started to launch these new satellites. That has been somewhat delayed. Probably there is a one-time spend in how much they're going to spend on Kuiper and the entire kind of low Earth orbit satellite launches that they're doing. I think that probably requires some explanation. But on top of that, probably there is around how much are they going to spend on AI and AI-related kind of improvements across the entire spectrum of things. Amazon, we know, is going to spend more than $100 billion in CapEx. That flows through the operating expenses and that starts to add a thicker layer of spend. So I think these two questions would probably help us understand, is this a one-time hit that the company is taking in margins, or is this something that as the year progresses, probably we got to add more spend. And plus, there is obviously the China tariff unknown that nobody knows how to solve that.
No, they do not. Rohit, two follow-up questions to that. One, do you think there is any risk that they will be cutting that CapEx plan?
So far, what we have heard from the three other large companies, Google, again, Meta, and Microsoft, they are strong and long on AI. So I expect nothing else from Amazon as well. And from a long thesis perspective, I think Amazon has the biggest, again, surface area of being the biggest beneficiary of AI going forward. They have the video platform, they have the advertising platform, they have the cloud platform, and of course, they have the e-commerce. No other company has the various different pillars where each of those pillars can benefit from AI and infrastructure spend. So I feel I think, if any, in fact, just as how Meta increased their capex yesterday, we wouldn't be surprised if Amazon also does the same today.
And when we're talking about that operating income forecast, put it in context for us. How does Amazon usually approach these forecasts? Does it tend to be conservative? You know, should we assume that they're going to come out and beat that forecast? How should we be thinking about that?
I think the wider range probably implies there are certain one-time costs that they may or may not incur. That's my first interpretation. But historically, very rarely has Amazon missed on their operating income forecast going back many quarters. So I feel there is an extra layer of conservatism, and there is an extra layer of perhaps one-time items that they may be incurring, like the Kuiper launch I mentioned. So in my opinion, street numbers would probably grind slightly higher. And so if we hear not too many negative things on the call, like CapEx or whatnot, then we would be buyers of Amazon shares tonight in this weakness.
Rohit, thank you so much. Stick around. We're going to hear more from you in just a few moments on another earnings report. Appreciate that. Coming up, we still got a lot to cover this afternoon. The latest earnings results from Amgen, Airbnb, Reddit, and of course, Apple are coming up. Stick around. More market domination overtime still to come. Biotech company Amgen out with first quarter results. Shares are rising just a bit. Yahoo Finance's Julie Hyman is joining us now with those numbers. Hey, Anj.
Hey, that's right. And they are going to be probably trading a little bit on the flatter side because they met expectations on revenue. $8.1 billion is what they came in with for the quarter, and then beat on earnings per share, 4.90 instead of 4.25 expected from the street. Amgen, the story there is quite a diversified portfolio, so looking good on a number of fronts and a number of drugs there. But the story that we've all been waiting for, of course, is for them to enter the obesity market, and whether or not Maritide is going to carry them into, really a hotter space than they currently are in. We know the company has been busy with a few deals in the last few years, and look like that's all coming to root right now with the good earnings that they've had for the quarter.
Thanks so much, Anj.
Yeah.
Appreciate it. We got to move right on here to Airbnb out with first quarter results, mostly in line with expectations. The numbers for showing earnings per share coming in at 24 cents versus the 23-cent estimate. First quarter revenue coming in at $2.3 billion, or 2.27, we rounded up. 2.26 billion is what analysts had been estimating here. And if you look at the company's second quarter revenue forecast, it's for $2.99 to $3.05 billion. The estimate was for $3.03 billion. So why are the shares down by some 3%?
It seems to be, Julie, we were parsing through the release. There's a part where they're talking about the second quarter average daily rate that they're expected to be charged. And they said that they think that's going to be approximately flat year over year. And they're specifically highlighting, they said we've seen relatively softer results, which we believe have been largely driven by broader economic uncertainties in the US. So it seems like there's perhaps a little bit of consumer softness starting to bleed through from what they call economic uncertainties in US spending right now. Again, we're not that far into Q2, right? But it is a month in, and it has been the probably most volatile month that we've had in a while in terms of economic uncertainty. So they're
Right.
starting to see that impact the business a little bit. We'll be curious to hear on the call just sort of what more color we get on how long they think that sort of extends and where they're kind of at with the consumer. Because there was some other commentary within the shareholder letter where they sort of argued that they feel like they're a business that can still thrive in an economic downturn and has kind of different levers to pull.
Right.
So curious kind of how they reason those two different
I
things.
mean, they do say in the second quarter that they expect their average daily rate to be approximately flat year over year. So we'll see what the implications of that are for the numbers as well. Well, Reddit shares are soaring following its latest results. Let's welcome back in Rohit Kulkarni, Roth MKM Managing Director, Senior Research Analyst, for more on those results. The shares up by 16%. Just to run through the numbers real quickly here as well. Revenue coming in at $392.4 million. That's better than estimated. EBITDA at about $115 million. That was much better than estimated. So Rohit, as we look at this stock, which has it's been public for about a year. It came public at 34, closed today at almost 119, and now it's rising by this much in the afterwards. It's been a pretty good performance overall. Rohit, I think you might be muted.
Oh, sorry. Hey. Yeah, it was a very emphatic result, in my opinion. As in, given the current context we are in, given the macro uncertainty that we feel that most of the ad names are going to face over the next 60, 90 days, coming in and providing guidance that is much above any bullish expectation, they are going to be rewarded for that. So I'm very impressed with what we are seeing from Reddit right now.
Rohit, you just mentioned sort of the headwinds that these companies that get a lot of revenue from ads could be facing. Can you just kind of break down what you're talking about there as far as how the potential uncertainty and slowdown could weigh on ad companies? And I guess the second part of that question would be the stock's now up 17%. Given that potential headwind, is that maybe a little bit too much?
Again, parsing the numbers objectively, the numbers tell a fantastic story. What they may provide with regards to their outlook for 2Q from a qualitative standpoint may drive extra uncertainty in the results. But overall, advertising names like Reddit, like what we heard from Snapchat, they tend to be at somewhat of a mercy of very large brand advertisers. And if there is a large brand company, say for example Apple, it decides to pull back advertising because they don't know how their cost structure is going to evolve over the next 6 months, advertising is the first thing that companies can just pause for a little bit and then figure out the rest of the cost structure. So that's where the uncertainty first hits. That's the first line of defense, or the first line that gets hit. And that's why we are worried about smaller, mid-sized companies. But Reddit clearly seems like an outlier here, where they are performing above and beyond other smaller, mid-sized companies.
Why is that, Rohit? Do we have a way of knowing? And by the way, the forecast you're referring to, the company is forecasting second quarter revenue pretty far above what analysts had been estimating here, at least $410 million. Analysts have been looking for below $400 million. Is it advertising? Is it also the sort of AI licensing that the company is doing? I mean, how significant a portion of its revenue is that at this point?
So at this point, the licensing revenues, licensing deals that they have signed, two significant ones last year, one with OpenAI, one with Google, they pay about $15 to $20 million per quarter. So they are not significant drivers of growth this year. Having said that, they are pretty big drivers of profitability. So that people cheer Reddit for that with regards to as compared to Pinterest or Snapchat that do not have similar deals with very high margins. Also, Reddit is very early when it comes to monetizing their user base. I think they are probably 2, 3, 4 years behind some of the larger platforms, and hence they are at a point that is letting them monetize at a much higher rate, and they're growing faster than the market. So perhaps there is stickiness in the ad spend on Reddit, and I think Q2 outlook is a very clear indication of that.
Interesting. Rohit, thank you so much. And thanks also to our Josh Schaefer for hanging with me during these earnings. Thanks, guys.
Thank you.
Time now now for What to Watch Friday, May 2nd. Starting off on the labor front, April's full jobs report coming out in the morning. Economists forecast 135,000 non-farm payrolls were added last month, while the unemployment rate and hourly wages held steady at 4.2% and 0.3% respectively. Taking a look at earnings, we'll have big oil capping off a big week of earnings. We'll be getting reports from Exxon, Chevron, and Shell in the morning. Exxon will announce results for its first quarter before the markets open. Analysts expect the company to benefit from higher oil and gas prices and better downstream margins. And finally, the Trump administration eliminating the de minimis exemption for low-value imports from China. The exemption currently allows goods valued at $800 or less to enter the U.S. duty-free. E-commerce companies like Shein, Temu, which is owned by PDD Holdings, and Alibaba, they're all bracing for the closure, which could lead to further price increases from goods from those Chinese retailers. That's a wrap on today's Market Domination Overtime, but don't go anywhere. On the other side of the break, we're kicking off Yahoo Finance's special coverage of Apple's second quarter earnings report. We'll be getting you instant analyst reaction to the results, and at 5 p.m. we'll take you live inside the Apple earnings call. You can scan the QR code to stay up to the second with the latest news and stock moves from the iPhone maker. Stay tuned. You don't want to miss it.